Shannon Smith from Smart Financial Planning. Just going to go through what should you be considering when we talk about waiting periods for insurance purposes. So let me just go through a few things that we need to have a look at. So what is the waiting periods are generally from the income protection insurance. So an income protection insurance typically has the waiting period that is the amount of time that you would have to wait following a claim being approved before receiving any money, provided you are still eligible to receive them at the end of the waiting period. So waiting periods can differ. They can be depending on the insurance providers, but also dependent on what you want, because it will have a direct impact over your insurance premium. So you might look at 14 days, you might look at 30 days, 60 days, 90 days, 180, 1 year, 2 years. There is also accident, which basically can happen straight away. So how do you decide on the waiting period? Your waiting period will be affected by the amount of time you basically can survive without your regular income. So if your income stopped tomorrow, how would you be able to fund your household expenditure, your household debt, so your mortgages, investment property debt? What savings do you have? Do you have long service leave, any personal leave, annual leave that you might be able to take? I know I have one client, we were talking about it, and we've put a really long waiting period on theirs because they have a number of months owing to them on long service leave. They also have quite a bit of annual leave. They have a lot of personal leave. So if they were to be not able to work, they would take the leave. And so then we could have a long waiting period. And it really does come down to the cost of the premiums too. The cost of a premium, the sooner you want the insurance company to pay, the higher the premium is going to be. So the shorter the waiting period, the higher the premium is going to be. But it really has to come down to your personal circumstances and what could you do and how could you survive if you didn't have any funds coming in over a period of 30 days or 60 days, and really coming down to what is your personal cash flow and your reliance on those funds. So hopefully that helps explain a bit on what we're talking about when we're saying about the waiting periods. Please don't hesitate to contact us if you have any further questions at all. I'm happy to help you out. Thank you.